So I need first get your thoughts on what you make of these numbers when you compare it to the Q4 numbers as well.
Well, actually, these numbers were a lot better than expected, a lot better than last year. And given the fact that we lost a week by the cancellation of the election and moving back, I think it's really showed that the underlying economy did as well as one could expect. However, for a country this big and given our rate of population growth, 2% growth is really no growth at all.
Yeah, no growth at all, because especially when you look at what the government is targeting, we're targeting 3% for the full year. But when you look at the performance in the first quarter, how does this measure up with the full year targets?
Well, so the 2% we got in the first quarter really means that most likely we're going to hit that target, if not surpass it, if we continue in that trajectory. Because now we're going to see once the government is in place, we'll see the economy start to ramp up. And apparently the slowdown that was expected was not at the same level as expected during the first quarter, even given that 1 week we lost by postponing the election at the last minute.
But when you look at the oil and non-oil GDP figures, how would you rate the performance?
Well, so non-oil went up, oil went down. So we produced a little less oil. On the non-oil side, we went up. The good thing on the oil side is we've seen oil prices continue to go up through the period. So that necessarily helped us cover up the fact that we pumped out fewer barrels. So as we start to, if that number ramps up to what we expect, the 2+ million barrels a day that we expect, that we're planning for, it should really help us out going through the rest of the year. And given what is happening in the Middle East now and the fact that tensions are really ratcheting up right now, you will expect that oil prices will continue to spike upwards going forward. So we should enjoy reasonably high oil price, at least for the foreseeable, for the near term, maybe to the end of this year and then until things calm down in the Middle East.
Yeah, still around the global dynamics for oil. I'm looking at the ministerial meeting, the monetary meeting they had over the weekend, and I'm looking at part of the conversations that came out from that and the fact that you're talking about the likelihood of still extending the production cuts till the end of the year. When you look at the impact of this on oil prices and understanding what the U.S. is trying to do with their own gameplay on oil, how do you see things playing out?
Well, so with the fact that you've moved the sanctions on Iran have been reinstated and ratcheted up, that means Iran can't sell any more oil. So somebody has to cut, and if you keep the cuts on, where is that extra supply to serve the people that used to, and that's mostly India and some Asian countries that used to buy from Iran. And right now Venezuela is also having trouble selling oil with everything that's imposed on them. So we should expect that those oil prices should stay, at least this year, should stay elevated for the rest of this year. Now the only question is, what happens with the rest of our economy, which would be in that non-oil economy? It's good to see that services continues to grow in the short run, but in the long run, we need to get agriculture and manufacturing up because, again, we have a young population. The services side requires a lot of training, a lot of knowledge to run. The places where we can really get people to work who don't have the experience, don't have that high quality education or have not been trained appropriately is really getting them into those lower end jobs, which is what you create in manufacturing and agriculture. And we need to figure out how to ramp that up.
Yeah, because interesting because you are talking to our attempts at diversifying the economy. But when you look at it, though, some will argue that the economy is still quite diversified. But when you look at how government is making revenues, that's where the challenge is.
Yeah, that is true. Our economy is diversified, but government revenues are still mostly from oil. The only way that is going to change is we need to take that tax net and spread it. Now, the only way you're going to spread that tax net is to find a way to bring everybody into the financial markets and to bring everybody to unearth every business out there. That means we need to go and get all the people who have informal businesses and make them formal. And the only way you can make them formal successfully is to give them a reason to be formalized. Right now, there's no reason to formalize. You're just telling them to pay money for nothing. But if we can bring them in, start to give them the benefits of being part of the financial society, which is loans, planning, things like that, then we can start to see government revenues start to diversify away from.
Yeah, still on government revenues, because I'm looking at the figures from the FIRS. They're saying the Q1 revenues are up 28% from last year to 1.5 trillion. And I'm looking at this and I'm trying to understand all the initiatives that they put in place over the past year or so and how that is paying this. And do you think this amount of growth is enough to meet the kind of targets that we need?
No, we need, again, it goes back, we need that tax base to grow. The number of people paying taxes, vis-a-vis the number of people participating in the economy, that number is way too low. We need to figure out a way to extend that tax base. But the only way you can do it is if you know who those people are and know how much they earn. And the only way to do that is to include them financially. And to do that, we have to give them a carrot. Because right now, financial inclusion for a lot of people is all stake.
But still looking at oil production, though, because I'm trying to imagine whatever OPEC decides to do coming in the month of June, we're still going to have our production capped. And as a country, we still need to produce more, at least when you look at the budget estimates, look at the amount of oil we really need to put out there. And do you think we're going to have enough to meet what our budget demands? Well,
the one good thing that's playing in our favor right now is elevated prices, which looks like it will continue for most of the year, given everything that's happening in the Middle East, given what's going on in Venezuela. Those two issues seem intractable, and there doesn't seem to be an easy way out. So that will continue to put downward pressure on supply, which should keep upward pressure on price. So that would help us, even though OPEC might not expand production. That should help us on one side. The one part that we need to ask ourselves now is to make sure that we don't have any unrest happening in the Niger Delta going forward. Every once in a while you hear something from one person or the other. We have to make sure we find a way to keep that off the board, because if that should happen, then that'll be completely catastrophic for the country.
All right, then let me move on to the next item I want to discuss here, which is the MPC meeting tomorrow. When you look at how the MPC postured the last meeting, where it took off 50 basis points to come at 13.5%, and the longer-term signaling, we've seen the CBN governor get a nod for a second term, and all that is being sorted out already. What does that mean for monetary policy going forward?
I think it will be almost imprudent to try to forecast monetary policy going forward. I think this first meeting is going to tell us what he wants to focus on for his next 5 years. Because if you think about it, between the last meeting and now, there was a lot of noise on who was going to be the new governor. So nobody was going to start any major strategic pushes in that period. Now he has the nod. He's sitting down to his first meeting. It'll be interesting to read the minutes of that meeting to see what he's emphasizing and what he wants to do. Now, the key thing we need is we need to make sure that there is, if you talk to people in business, they want to make sure that they have access to foreign exchange. Investors need to know that they can come in and come out. So any strategy that is built around supporting those things and going away from unnecessary bans and tariffs, rather using taxation and policy rather than bans and tariffs to manage the way we allocate effects would be greatly welcomed.
Yeah, but interesting work they're doing so far. But when you look at the monetary policy going forward, we're seeing inflation was one of the key talking points from the last meeting, and we're seeing we saw that slight uptick from the last inflation numbers. How do you see this impacting the conversations going forward?
And that was just a slight uptick, because whether you like it or not, we need to grow, and we need to grow a lot faster. And when there's growth, you're going to expect some inflation. As long as that inflation continues to stay marginal, as long as that growth continues to stay marginal, especially when you look at the core things like food, fuel, and what have you, as long as we can keep that number close and keep it from growing out of control, I think we'll be fine. And really, I would like to see a central bank that errs on the side of growth rather than fighting inflation.
All right, but very quickly, just want to get your predictions for the meeting tomorrow.
I think they'll hold everything. They'll hold pat on the numbers. There'll be no changes, and we will see some definite pronouncements on how the bank is going to look at strategically for the next couple of years.
All right, then. Thank you so much for your time on the show today.